The US dollar opened the new year with a steady advance against its major rivals. The dollar's rally to annual highs was triggered by a sharp rise of US Treasury yields because investors dispelled fears about the Omicron's severe damage to the US economic recovery. Another factor is that investors are anticipating rate hikes by the US Fed. Nevertheless, the US manufacturing PMI calmed down dollar bulls because the actual print undershot the forecast, so the US currency loosened its grip. Watch this video to find out how the euro traders took advantage of the situation. The single European currency is trying to make an upward correction, having rebounded off the lowest level in 17 months. Yesterday's traders cheered data on Germany's labor market. However, today, new macroeconomic data reminded investors that the EU economy might be losing momentum on the back of growing coronavirus rates in Europe. According to the revised data, both the services PMI and the composite PMI were downgraded for December. The Eurozone's service sector slowed down its business activity to 53.3, the 8-month low amid the COVID resurgence. Moreover, the manufacturing sector remained subdued due to disruptions in supply chains. Demand for consumer goods and services in the Eurozone rose at the slowest pace since March. The labor market also showed the weakest employment growth since May. The euro-dollar pair again got trapped in a range-bound market. The borders are seen between 1.1280 and 1.1350. Analysts reckon the currency pair is set to continue trading sideways. The pair will escape the flat market on condition the price breaks one of the borders and settles below or above it on the 4-hour chart. The euro-dollar pair will have a chance of breaking one of the border on Friday in light of the US non-farm payrolls. Market sentiment on the pound sterling is quite different. The British currency has settled above the key level of 1.35, the highest level in more than a year. Investors welcomed the decision on the British authorities not to tighten restrictions in the kingdom. Besides, they were encouraged by the outcome of the Bank of England's policy meeting that ended with a rate hike. Thus, experts foresee a further uptrend for the pound-dollar pair. To cement its upward move, the currency pair has to surpass resistance of 1.3550. The buyers' targets are located at 1.3611 and 1.3630. How is trading going to unfold in the short term? We will definitely tell you in our next video reviews. Don't miss them and stay up to date with the latest market news. See you!